So I'm often asked, what's the best loan program for me to use? And that's an excellent question, guys. On today's video, I'm going to talk about the loan program that really fits the most possible scenarios that's on the market today. The FHA home loan product is one of my favorites because of its versatility. If you are in the market today, 6 months from now, next year, this video is going to give you everything that you need to see if this is a program that you should look into. When we talk about the FHA loan, we want to know, why is this a good loan program? This program is so versatile. It provides excellent opportunity for those that are looking to become homeowners. Now, depending on your specific situation, credit, income, so on and so forth, it may take a few more steps for you, but it is well worth those extra steps. Before we go any further, you got to remember why you are looking to acquire property. Why are you on this journey? It's not just about buying real estate. In my opinion, it's about building a financial foundation for your future, creating a safe, stable place for your family, for your children, right? And investing in your long term financial stability. Who should use the loan program? If you're a first time home buyer, definition, you've not owned real estate or had an interest in a residential real estate in the most recent 3 years. You're a subsequent buyer. You have owned in the most recent 3 years, but you're looking to buy again. This program is for you as well. If you're a credit challenge buyer, for sure, this is a great loan program for you. If you're an income challenge buyer, you might need some additional income to help you get into the home loan. Your debt to income ratios may be a little higher. So this is who should consider the FHA loan program. Now, let's get into your credit. And as you can see, the FHA home loan product offers a very wide range of credit profiles. Technically, you can start off at a 500 middle credit score to a 579, and you could qualify and close on an FHA loan. Matter of fact, folks that fall within that range, because you have to put 10% down, those loans tend to close and be a lot smoother as long as we can show that whatever caused that credit score was an isolated period of time and you have reestablished. The reason those loans close a lot smoother, in my opinion, because you have more skin in the game. Cash is king when it comes to that. From 580 going up to your maximum credit score, you can put down as little as 3.5%. This is one of the ways that FHA helps in its versatility to cover a wide swath, a wide range of different credit profiles. Let's say you're in a Chapter 13 wage earner repayment plan. As long as you've made 12 payments in that wage earner plan, obviously no late or anything of that nature, and we approve you for a home loan, you qualify with the ability to repay, and we can document your bankruptcy payments, and your trustee approves for you to buy another home, you can do so while in a Chapter 13. Now, if you've gone through a Chapter 7, you want to go 2 years from the discharge date, but we must be able to establish whatever caused the Chapter 13 or the Chapter 7 or the lower credit scores. That was an isolated period in time, and whatever that situation has been resolved and you're moving forward. But as long as you can do those things, that's why we love the FHA loan program. Now, manual underwriting. If you want to deep dive into manual underwriting, what that means, watch this video right here that we did recently. But long and short, this is just a underwriter actually looking at your file from a manual standpoint opposed to an automated engine qualifying. And so manual underwriting, refer eligibles are a possibility with FHA. No credit scores. If you truly have not been in the credit system, say you're someone that is new to the credit system, you don't have any credit scores, and you've never participated, there are ways for us to establish a credit profile for you and close that loan with technically no credit scores. If you have student loans, there have been some changes recently within the last year and a half where FHA has responded to the cost of buying a home and inflation. As a result, we only have to account for a half of 1%, opening up the door for more people to qualify. If you have a documented income based repayment or income driven repayment plan, we can use those payments. But more times than not, student loans on credit reports, especially after the pandemic, they were in deferment, and a lot of those payments are zero. So that is another win in how FHA helps on the credit tip. And then last thing, FHA does have the equivalent of private mortgage insurance. It's called mortgage insurance premiums. FHA came out and said, you know what, we need to make it more affordable for folks that are using the FHA loan program. So the annual portion of the mortgage insurance premium was lowered to a little more than a half of 1% to 0.55%. So a lot of good things on the credit tip to help you qualify for an FHA loan. Let's move forward. Income. This is how FHA helps in the area of your income. Obviously, if you're a W 2 employee, we can use that income to help you qualify. If you're a self employed, business for self person, non commissioned employee, or you own the business 25% or more, and you have a corporation, some type of corporation structure, all those things apply. Just got to make sure you have the 2 year filed tax history proof, and then that opens the door. You have access to that. Now, let's say you're a W 2 buyer, just graduated from university. You got that letter of intent to start the new job, and you're coming up just a little short. I love the FHA because you can have a family member co sign. And obviously, you don't want to do that willy nilly, but I've had several great experiences with past clients that have used this strategy, and it's worked beautifully. So, co-signers are another way to help that example that I gave earlier get over the hump until the time in which that person's income is commensurate to make a restructure, if you will. FHA also is great in that it allows for higher debt to income ratios. Not that I want you guys to go out here and overextend yourself, but it helps to bump those ratios a little higher to help you get onto the property ladder. But you do want to be very careful with that. Moving forward, loan types. Love the loan type scenario. Why? Because there's nobody that FHA did not think of. For our standard FHA loans, we're going to call those a 203B. That's your standard forward mortgage with the typical 96.5% loan to value or the 3.5% down payment. But you also have the rehab versions. You have the 203K, 203KS. That's a full rehab loan or streamlined version. And on the streamlined version, you have to borrow a minimum of 5,000, can't exceed 35,000. Great for maybe buying an older home in the environment that we're in, finding that value there, and then updating it cosmetic wise with the things that are allowed with the limited version. The thing that you need to understand with a 203K, those are really your subsequent buyers, in my opinion, or a real savvy first time home buyer that understands that is a time process to get that done, but it's available. Moving on, 203Hs. Unfortunately, we're in that weather pattern season where we might have tornadoes, floods, things of that nature. And in the past, we've had floods and presidentially designated disasters. That's what the 203H is designed for, to help those folks that fall in that area to be able to get back on their feet, get reestablished, and move forward. Section 184 and Section 247. 184s are for our Native Americans. They have a program for them if they are a part of a federally recognized tribe or they are a federally recognized tribal member with proof of that. They have a loan program for themselves as well as the Hawaiian Islands. That's what the Section 247 really covers. So the home equity conversion mortgage, the HECMs, for those that are retired, people that do 203B, regular FHA loans, in that environment now, rates are a little higher. Hopefully, things keep going the way they are and rates come down here over the next year and a half. And you can look to do a streamlined refinance or a full refinance. There's also the $100 HUD homes and the good neighbor next door. Let me show you that. The HUDhomestore.gov is where you would look to find any of your foreclosures or good neighbor next door homes. And a $100 HUD program has to do with foreclosures if you can find them. That's the HUD store. And then the good neighbor next door, just to give you a summary, is a program that is designed to put good neighbors in the neighborhood. It's for law enforcement officers, police officers, teachers, firefighters, and EMS type career people. You could buy these homes at a 50% discount, 50 cents on the dollar. The requirements are you must live in the home for 36 months if you're able to do one of these. The portion that is going to be forgiven is placed in a second mortgage, a silent second. You don't have to make any payments on it. And as long as you meet the requirements of the program after the 36 months, that money goes away and you get the house for 50 cents on the dollar. You must qualify for any FHA insured mortgage program. Your down payment is only $100 and you may finance your closing costs. You can also get half off of your appraisal. Loan types is another way FHA helps with potential home buyers, whoever you might be. They also help in the area of down payments. We just went over some of those with some of the programs, the $100 down and the good neighbor next door. But just for the regular 203Bs, again, a 580 middle score and higher, you only are required to have a 3.5% down payment. If you have a 500 to a 579, you're required to have a 10% down payment. And that's on top of your closing costs, unless you have a realtor that's able to negotiate some seller concessions for you. If you need a great realtor, reach out. I have a host of realtors that we work with nationwide, and we can find a fit for you if you need help there as well. When you're looking for down payment assistance, most of the time it's going to be a government insured loan like the FHA loan. One caveat I would say there is this: you have to remember your community property states, and I'll use Texas as an example. Why is that important? Some of these down payment assistance programs may require household income as well as household debt. And if that's the case, regardless of if one spouse is on the loan or not, you will have to qualify with all of the debt in the house and or all of the income in the house. And most of these down payment assistance programs have a couple of common characteristics. One, minimum credit score. Two, some type of income threshold. Now, there are some national programs that have neither, but those programs are going to fall in the repayable type of down payment assistance. Whenever you're looking, you want to look at the city level, county, state. These are the places that I would look for down payment assistance. But one that a lot of people don't know about with FHA is a family member. Let's say I want to give a down payment to my son or daughter, and I'm not gifting it to them. Okay. Meaning I'm not gifting equity from a house that I own, but I'm actually going to give them a down payment in cash. Let's say I don't have it. I could go borrow said money and then gift the down payment that way. The payment that's associated, that's on me, they're not required to pay for it. If you're real savvy, let's say you go to the 401k or something of that nature because you want to help your children, but you need that money for your future self. A lot of folks don't know, but you could create a note, okay, where your gifter, the recipient of the gift, has to pay you back. Maybe you have them pay you back without any interest, okay? But there's a way, and again, that's why we like FHA, because there's a lot of ways to get creative with the product. Realtors also can give a portion of their commission. I've seen that over the years where we've had to get creative to get a deal closed. But as long as the broker is cool with it, realtors can contribute some of their commission towards the closing. And then there's things called escrow repairs. Example, let's say We have bad weather, right? Rained real bad, and the appraiser went out and found out that there was some chipping paint, and it has to get done for the appraisal to be as is and not subject to. The weather will not accommodate for that to happen and say we have to close. Depending on your lender, you might be able to have an escrow or holdback, and then the title company holds that money, you're able to close. And then there's a certain period of time, let's say the weather breaks, and then the painter or whoever is able to go out and get everything done, and then the title company pays them. Another way to make a deal for you to get into a home with the FHA loan. Let's move forward. The last thing I want to touch, anytime you have a government entity, a government advocate, if you will, there are going to be a lot of consumer protections. And so just think back, the pandemic, a lot of loan modifications and things of that nature are in place even today. And that may be why we don't see a lot of foreclosures over here at the HUD Home Store. Got those low rates. People have an incentive to keep those low rates or work with the government and the servicer, the place where they're making their payments, to stay in their home. So consumer protections are something that a lot of people don't think about until you need it, because if you had a conventional loan, if you had private student loans during the last situation, then you had to pay. And consumer protection is one in which I think you need to consider heavily when thinking about an FHA loan. If you like videos like this, consider subscribing to the channel. If you need help with getting an FHA loan and you just want to see where you are, reach out for a scenario. I'm sorry. You get a free loan scenario. And then if you're currently in process and you have a loan estimate and things of that nature, you'll be surprised the amount of money that a lot of people are paying even today. And so get a second opinion. It's your right. We would love to be that second opinion. If you have a great deal, we'll let you know. If not, we'll let you know. And that way you will have options, right? The spice of life. So reach out, because we would love to do that for you. I would like to conclude with this. Home ownership could be achieved if you have the right program, in this case, the FHA home loan, a plan of action. You know why you're buying. It's just not to buy real estate, but it's for safety, for your family, for your future financial self, for your stability, a place for you to make memories. And then most importantly, if you have the right team, the right partnership. If you want to know the best loan program that's on the market today here in these United States, you want to watch this video. Talk to you soon. Peace.